Most beginner traders lose money because they trade without following the trend. Today, I will show you a simple strategy using only the 20 SMA and the 200 SMA. A powerful and reliable method to identify high-probability trading opportunities in any market environment. Welcome to Fulgence FX, where we simplify the complex world of Forex trading. If you are serious about mastering the chart step by step, subscribe and join our community. First, let us look at the 20 SMA. The 20-period simple moving average follows recent price movement. It helps traders effectively identify short-term price momentum and discover potential high-probability entry points. Next, we have the 200 SMA. This significant line represents the long-term trend of the entire market. Many professional traders use it to determine whether the market is generally bullish or bearish. For a buy setup, the first condition is that the price must be above the 200 SMA. Also, the 20 SMA should be clearly positioned above the 200 SMA, confirming the bullish bias. We wait for the price to pull back toward the 20 SMA. Look for a bullish confirmation candle, like a hammer or a strong green engulfing candle. Once confirmed, enter a buy trade with a stop loss below the recent swing low. The same principle applies in a downtrend. First, price must be below the 200 SMA. The 20 SMA should also be below the 200 SMA, confirming a bearish trend. Patiently wait for the price to retrace back toward the 20 SMA before you consider taking any action. Look for a strong bearish confirmation candle at this level before entering your sell trade. Place your protective stop loss above the recent swing high for maximum safety and risk control. Always remember, no strategy wins every single trade. Proper risk management is absolutely crucial. Risk only a small portion of your account on each trade, and always use a stop loss. Common mistakes include trading against the major trend or entering too early. Ignoring stop losses and risking too much per trade are also common pitfalls. To summarize, follow the trend, wait for confirmation, and use proper risk management. Stay patient and consistent, and the results you seek will surely follow. Thank you for watching Fulgence FX today. We truly appreciate your constant support and engagement. If you enjoyed this, please like, subscribe, and remember, learn today, freedom tomorrow. See you in the next one.